Hi, this is Patty. This is August 2023. I want to talk a little bit about the 2-1 buy down. Is this a good program? Maybe. Is it right for you? Maybe. Let's get into the little bit of the fine print. So a 2-1 buy down is really a 30-year fixed rate, but year one and year two, it's cheaper. How much cheaper? It can be a lot cheaper. So why would we do this program? First of all, it gives you the security of a 30-year fixed. Okay, whatever the final rate's going to be, we want to make sure you're comfortable with that payment. Interest rates are supposed to drop in the future. We don't know if that's next year, the year after, or if it's going to happen. We also don't know if it's going to drop down a little bit or a lot. So we want to plan, one, to make you comfortable, but also get the house payment you want. So I like to say it's a fake 30-year, fake, right? It's really low and artificially low year one and two. Why would you want that program? So let's say you may not have enough commissions coming in right now, or maybe you have some debt to pay off, or you just want a lower house payment. So year one, that payment is going to be 2 points lower than year 3 through 30, the rest of the 30-year fixed loan. What can you do in that time frame? If you're saving hundreds of dollars per month, it might be a great time to pay off all your debts or some of your debts that first year. Year two of a 2-1 buy down, the interest rate is 1% less. It still gives you time to pay off debt. Then if we refinance later on, great. We have saved some interest over that time. Now, what's really happening behind the scenes? So behind the scenes, the way you're getting a 2-1 buy down is it costs money. We're going to ask the seller or the builder to pay for that for you. Now, you're awesome, right? But would you pay for my closing costs or my 2-1 buy down? Maybe, maybe not. So number one, we'll chat with you to see if you like the idea of this program. We'll draft the pre-approval or pre-qual letter to hit what those goals are. And then we'll ask your realtor or builder if we can work that out in the numbers. Let me give you an example. Sometimes the seller right now in today's market will go ahead and reduce the price, but maybe they've already reduced the price and gosh, they can't reduce it another $10,000 or $11,000. So you can also bump up the sales price. Why would you want to do that? Because maybe it hits your first payment goals and maybe it allows you to pay off some debts, cars, 20 to 30% interest rate on credit cards, 6% plus whatever on student loan debt. So this might be the perfect program for you. So there's cost up front that is paid by the seller. Okay. It's a 2-1 buy down, seller buy down, and you get the benefits of that. So when we chat, we'll decide if that makes sense for you, how it feels, and what that does to the payment. But this is a wonderful program for many clients. We just have to make sure it's comfortable for you. Hope this helps.